Terrific. Thank you, Amber. Thanks for having me tonight. Just want to give you a quick overview on the IRS, some of the taxpayer relief acts that happened here in 2020 in response to COVID-19. First off, let me just introduce myself. My name is Alan Hauschild. I am a certified financial planner with Heritage Financial Services. I also have a designation certified long-term care planning. So I do a lot of long-term care strategies, long-term care insurance, especially for folks who are working with Parkinson's, dementia, Alzheimer's, as a way to preserve assets and also be able to make your assets last as long as we can in the most tax efficient manner as possible. So I'm going to go ahead and start with tonight's presentation. Feel free to ask with any questions. Moving on, the first thing I'd like to discuss, the Taxpayer Relief Act. They extended the federal income tax deadline and payment extensions back to July 15th. So you'll notice this year, instead of April 15th as the due date for the tax returns, it's actually July 15th. That applies to all individuals, trusts, estates, partnerships, associations, companies, and corporations. And first estimated tax payment is due July 15th as well. States are not required to follow federal guidelines, but the state of Nebraska has followed the federal and pushed back their tax deadline until July 15th. The next item here also applies to IRA contributions and Roth IRA contributions. They've also been pushed back to July 15th. So if you haven't made a contribution for 2019 and you'd like to, you have until July 15th to do so. Same goes for employer contributions for SEP IRAs, simple IRAs, and solo Ks. Okay. On March 25th, there was an IRS ruling called People First Initiative, and it was basically helping taxpayers who are providing or seeking relief. A lot of times, if you had an installment agreement where you were paying the IRS over a certain period of time, it basically made it more user-friendly to pay back to the folks there. The biggest act that happened so far this year, 2020, is the CARES Act. The CARES Act is the Corona Aid, Relief, and Economic Security Act. It's signed into law March 27, 2020. And basically the legislation is aimed at providing relief for individuals and businesses impacted by the coronavirus. This is the largest federal program ever in the history of the United States, as the price tag is expected to come in at over $2 billion. All right, so moving on, some of the individual provisions here I'm going to go through next. In regards to your qualified retirement accounts, so that's your IRAs and your 401ks. So for a lot of folks, if you've heard the term required minimum distributions or RMDs, you have some good news. You are not required to take your RMDs in the year 2020. So this applies to all types of IRAs, qualified accounts, and inherited IRAs. It is optional for employer plans. If you're pulling from an employer plan, that may be different. And then also beneficiaries subject to a 5-year rule, inheritance rule, can disregard 2020, extending the distribution period, okay? Also, if you've taken your RMD on or after February 2020, it can be rolled back into your IRA investment account by July 15, 2020. There is one exception, and that is inherited IRAs. If you've already taken that, you will need to keep it for 2020. Okay. The next screen just talks a little bit about qualified retirement accounts. So this is your 401k, 457, 403b. So this talks a little bit about coronavirus related distributions. So if you're still in your working years and you've been impacted by COVID-19, and who's eligible, I'm highlighting here, is a taxpayer spouse diagnosed with COVID-19, or you had adverse financial consequences as of COVID-19, the taxpayer, you certify your own eligibility, and if that applies to you, then you can pull up to $100,000 from your retirement account, or 100% of the balance, with no penalty and no mandatory withholding. And so that's an opportunity if you've been unable to work, that you can pull it from your retirement account. And then any taxes that are due can be recognized over a 3-year period. And so it gives you a lot of flexibility there if you need to pull it from it. Normally in the past, it was up to 50% or 50,000. So they just more or less doubled it to up to 100,000 or 100% of your 401k balance. Okay. Next item, retirement plan loan relief. So if you have a loan with your 401k, it gives you some extra provisions there where it increases the loan limit, expands how long it takes to repay back the loan, and then basically suspended loan payments through December 31st, 2020. And the eligibility is the same as the Corona-related distribution I just covered on the last screen. Okay. Moving on, this is something that probably impacts everybody on the phone today, and that is the recovery rebate. So this is where taxpayers will receive a refundable tax credit for the year 2020. So the credit amount is $1,200 for individuals, $2,400 for joint married filers, plus $500 for each qualifying child under age 17. So if you have a 17-year-old or 18-year-old, that does not apply. They have to be 16 or younger to qualify. This is phased out, so everybody's eligible to receive this, but if you have a high enough compensation, there is a phase out that begins on adjusted gross income. And the amount is $150,000 married filing jointly, $112,500 for head of household, $75,000 for all others. This is phased out by 5% or $50 per 1,000. So if you have reported income of $1 million, there's highly likelihood you would not receive this rebate. Most folks have probably received this already in your checking account. If you haven't, you can go to the IRS website and input your routing and account number, and then they will initiate that. So they're going to be continuing to make deposits and also send out checks over the next 2-month period if you've not received it. Now, federal student loans have also received a suspension of loan payments. So just required payments of principal and interest are suspended through September 30th, 2020. So that's wonderful news if you're paying off federal student loans. No interest will accrue on those loans during this time. And credit reporting agencies will see suspended payments as regularly scheduled payments. An employer is able to contribute up to $5,250 towards an employee's student loan, and it will be excluded from income. So that's a really nice benefit if you have a relationship with an employer who's able to offer that type of income for you. Okay. This is also something that's new this year. As you all recognize, probably about 2 years ago, they changed the tax law. And with that, it made it very difficult to itemize because they basically doubled the standard deduction. So it's a lot more difficult to itemize, and it's a lot more difficult to get write-offs for charitable contributions. So for this year, up to $300 of qualified charitable contributions, you'll be able to write off your tax return. So this applies only to those who take the standard deduction, and also if you give cash contributions only. So you're not able to give stocks, you're not able to give away items, it's cash contributions only. The adjusted gross limit for cash contributions temporarily suspended is 100%. So if somebody has, they've done well for themselves throughout their life, and they want to give away a lot of charitable donations, in 2020, donors may deduct charitable cash donations up to 100% of their adjustable gross income, as opposed to the current 60% limit. So if charitable contributions or funding is important to you, you get a special break in 2020. And then also, if you make a cash contribution above 100% of the income you're reporting this year, that tax contribution credit is forwarded up to 5 years. You can use it up to 5 years. Okay. The next item is unemployment compensation. So the federal government acted very quickly, just knowing that we would experience higher unemployment. And if you've seen the numbers, you've probably seen that we're in the ballpark of 18, probably soon to be 20% unemployment as a result of COVID-19. So the federal money has given the money to the states. So the states have the ability to increase unemployment benefits by up to $600 per week with federally funded dollars. Now, this is allowable until July 31st, 2020, and then unemployment benefits are available immediately. There's no waiting period. So as a result, I know there's a salon owner who's a client of mine, and they've decided to basically not open for June 1 for two reasons. Number one is it's for health and especially with COVID-19. But also number two, a lot of her employees with the $600 per week, in addition what they would receive from the state for unemployment, they were making more per week than if they were working. So that is something that we're seeing out there, okay? Now, unemployment compensation is usually not available to self-employed individuals, but this year they qualify. And basically they're ineligible for regular unemployment and extended unemployment or pandemic unemployment. They'll be eligible for up to 39 weeks of benefits. So that is something, if you know of anybody who's self-employed, they may be able to benefit from this provision, okay? Now, I did want to take a moment and just kind of go through some of the other changes that we've seen in 2020. It's not on the screen in front of you, but in 2020, we had a couple changes in regards to required minimum distributions. So starting in the year 2020, if you turn 7.5 in this year, and you basically, you don't have to take your RMD until age 72. So they moved the age of RMD in 2019, it was 7.5. Now it's 72, so that's a positive change. The other change that you're seeing is in regards to passing on assets to your children. Anybody basically without a spouse, they've made some things to basically eliminate what's called the stretch IRA. And what that means is your beneficiaries basically have to report that income within a 10-year period or 5 years for some individuals. So that is kind of a big change that occurred this year that I wanted to make you aware of, okay? Now that kind of wraps up everything I have here for the employees. There are some small business relief packages that are available. That's being offered through the Small Business Administration resource and also some tax provisions. At this time, I'm not going to go through those, but if there's anybody on the line or anybody viewing this webinar, I'd be happy to visit with you because it's a good way for business owners to keep employees on the payroll. And as a result, they get credit and, it's kind of like a loan that they're forgiven if they keep employees on payroll. So it's been a good thing for, I think, keeping people employed. And like I said, I'd be happy to visit with anybody with any questions for the small business owner relief packages that are out there. Okay. At this time, I'm going to open it up and see if we have any questions.